Hi everyone, welcome to yet another episode of Squawk. In this episode, we're gonna walk through some of the recent market activities today and cover some of the volatilities that could potentially happen. More importantly, I'm gonna walk you guys through my thought process. So with that being said, let's turn our attention to the chart. Right in front of me, I have the S&P 500 ETF Trust. It's the SPY index. So let's start with this. Here we have an all-time high around 480. Let's put a horizontal line. That's our benchmark. And the goal is essentially to get back up there. Now, that's easier said than done because today we already breached this first support around 430. Let's put a horizontal line. And this is a support formed during October of last year. I want to use this as a reference point. October is kind of like the beginning of the last quarter, and companies are already in the final stage of preparing for their annual report, which could be the defining point of how things wrap up for the fiscal year of 2021. The remaining 2 months kind of just put the books together, get the things audited, get the things filed, and that forms the final draft of the financial report that we're going to release in the beginning of 2022, which right now we're in the midst of the earnings season. We see a couple of earnings, big jumps up, big jumps down. Most of the actions are heading down, especially for tech stock, which of course we're going to take a look at a couple of big names. And these price activities form the slide that we see in the stock market for the past week. So first things first, we're going to look at SPY. Don't look at this. Don't pay too much of this tail. It could just be a through print intraday. It could just be a through print from intraday trading. I will not refer to the low of this tail because that's not a real print. Right now, I'm really just looking at the low of yesterday, which is 420. Let's put a trend line. That's going to be the next point to breach. If we breach that, of course, there's a chance of getting lower. Altogether, I'm looking at an additional 5%, no more than 10% from here, which overall, I will still say it's healthy. Because if you look at the weekly chart, we came a long way, right? That is the March of 2020. Let's put a vertical line. That is the middle of the pandemic where things are shutting down and we're in the midst of recovering. That's the reference point. So from there, we came a long way and we really just went straight up. If you look at the relative strength index, RSI, we are at 33 during the March of 2020. And that is, of course, oversold. And we came all the way back up to around 70. That is overbought area. So that trend continued all the way through the past year. This year, we're of course starting the year off with a correction. I don't want to say this is a crash or is a crisis yet. I don't think that will likely to happen with a big chance. I do think we need a small correction just to have a healthy chart. I think it's actually very dangerous to go straight up from here. So overall, I will say I'm not worried about this price activity in the S&P 500. Now let's come back to daily chart. The next thing I will really be looking at is some sort of bounce back from here. Now, that being said, I'm not saying that this thing just gonna bounce all the way back up to 480, which is all-time high. I think that's probably unlikely. I think what I want to see is bounce back to somewhere about 450 or even 460 area to have some sort of healthy pullback, and we're gonna see how the correction goes. So right off the bat, I'm gonna put a trend line. That's gonna be some sort of small bounce back that I'm gonna be looking at. From there, maybe we're gonna head into a bigger correction. Maybe we're gonna have a couple of volatile days and then come back up again. So that's overall what I'm thinking. Of course, it could head down more, but it's not going to go straight down from here. It's going to come back up a little bit. We're going to see how this thing bounce back up, and then we're going to continue from there. So that's the big thesis of what likely is going to happen for the first quarter. So first episode of the year, I did the first quarter overview, and my overall recommendation was hands off. And I stand by that recommendation. I think it's a little bit too dangerous to be going in and out at this price range, just because people gotta shake out their positions on both sides, and it could create a lot of volatility. So right off the bat, in terms of the market, I just want to throw that out there. If you're a short-term trader, if you're on trading breakout strategy, this is definitely the kind of stuff that you want to pay attention to. For me, I no longer do breakout trade, but I do respect the volatility contributed by breakout trades. So that's definitely something to watch out for. So next thing is on the right hand side, I have the stock list. As you can see, it's sorted by intraday changes. That's the first thing is actually TLT. TLT is the 20-year Treasury bill ETF. And essentially, it's an ETF product that tracks the long-term T-bill. So the reason I think this is interesting is because this chart actually shows relative strength comparing with S&P 500. Now, of course, I'm not saying in long term this thing performs well, right? Because if you look at long term, it's actually not doing well. S&P is of course doing much better. But if you look at the past couple of days, it did came down a little bit, but it did not come down nearly as much as S&P 500, which I thought it could be interesting because what this tells me is this point market is kind of like a stalemate, right? Do we go back up, making new highs, or do we come back down a little bit, create a slide, and create a bigger correction? I think that call kind of falls on Federal Reserve. So Fed really needs to come in here and make a big statement. And the statement is really just about raising interest rate or having the interest rate fixed. Now, I think this is not a matter of who came up with the right math, who's doing research, who's making better prediction. I think it's a matter of choice. It's a matter of choice of whether Federal Reserve want to tighten up the monetary policy or encourage the purchase of Treasury bill. So it's a matter of choice, and it could sway both sides. In terms of likelihood, they have been a little bit hands off of changing that interest rates, but who knows, right? Maybe this year they're gonna make a big change. But setting that aside, what will happen if they do raise the interest rate is obviously there's a huge attraction point in buying long-term T-bill, right? The investors are gonna dump the money in stock market and come back to T-bill. What that means is the security market is gonna drop a little bit from there. I don't know how much yet. I don't think that there's an argument saying that okay, stock market has been rallying for 10, 20 years. Let's take a chill pill, right? There are, of course, people voting for that argument. I can see how that can be an appealing argument, although that's not an argument that I will take, but it is out there. Definitely, that can also be a contributing factor to tip the balance a little bit in the stock market. The next thing on my list that shows relative strength is actually gold. Now, we are, of course, involved in gold, not very long term, only just very recently in this spot here. We'll take a shot just to hedge away some of our risk. As you can see, show some relative strength. So who knows, maybe I'm right, make some of the losses back, or maybe I'm wrong, but that's okay. And we have other long-term positions that go against gold. So overall, I would say this is more like a hedge. Um, I know Ray Dalio is big on gold. I know he's involved in this name. We really just need a trigger, and this is the trigger I'm looking for, especially this long-term wedge pattern. So it goes all the way like this. So that's the downward resistance and uprising support. Overall forms this wedge pattern, which I thought it would be interesting. The technical factor aside, I do think there's a good chance that gold can be going up from here. Right above, I'm looking at 188 or even 190, which can be a good hedge just to protect some of the losses that are in the tech sector right now. So if you're a gold trader, if you're looking for commodity, so I think this is definitely a sector to go. Now, of course, you don't have to shoot for gold, right? You can do silver, you can do copper. There are lots of products out there. But I do believe it's a fair sector to bet on under this kind of market volatility. And then Lockheed Martin showing relative strength. I'm not going to go too deep in that. It's in the industrial sector. Industrial sector tend to show relative strength when the technology sector comes back down. So I'm going to just holding LMT, Lockheed Martin. I'm not doing much. And we're going to see how that thing go. Next thing on my list is Bitcoin. We're of course adding it on the way down, right? I'm not going to let this price go. I think this is a great price for Bitcoin. First buy is all the way on this day. Let's put a vertical line. And then I think I add on this day, I add again on this day, and I add again on this day. Pretty much every time the stock comes back down, like 5-10%, I add a little bit on my portfolio. Overall, I think this is the kind of pullback I've been expecting. Of course, in the beginning, you're gonna expect the volatility, you're gonna expect a little bit red on your account, but I think overall that's okay. I stand by my thesis from the last episode. I don't think Bitcoin is investment. I think Bitcoin is still a speculation. We're purely trading off supply and demand. We're purely trading off that price action. But I do believe there is uprising demand in cryptocurrency just simply because we can't always rely on gold. We can't always rely on offshore currency exchange. Who are you going to trade against, right? Are you going to swap your dollars with British pounds or Chinese yuan, or you're gonna swap the dollars with Bitcoin, right? Eventually, market's gonna make that realization. It could take a long time, but that adjustment is gonna come sooner rather than later. And when that day comes, there's gonna be a huge wave of buyers jumping into the market and trying to purchase Bitcoin. And I think that demand is definitely there. So that's about the top of the list in today's price action, which can be interesting. I noticed that these names I haven't really talked about in the past, which is very rare, right? Today is a rare day. I don't talk about TLT every day, right? I talk about tech sector every day. So if you take a look at tech sector, one of the names that dropped a lot is actually Nvidia. It came all the way from the top at 340. Let's put a horizontal line, and now it's at 200-day moving average. So let's put a horizontal line. I think there's a huge chance that is a big support right there. You look at my company's algorithm, this is definitely one of the buy spot that's highly recommended. If you're looking at long-term swing, this is a spot. If you look at short-term bounce back, this is a spot. If you look at moving average, this is a spot. So most of the boxes are checked, and I think there's a good chance that this thing bounce back up. If you look at the relative strength index, it's been about 39. I think there's definitely a small chance of hovering around 30. I don't think that's going to stay that long. If it goes down there, it's going to be a V bottom for sure. Right now, we could still be looking at a V bottom. If not, we're going to be looking at U bottom. There's definitely a trade here, depending on the thesis, depending on the time swing, depending on your window. I think it's a huge opportunity here for stock in the computer chips industry. Next thing I want to talk about is Zoom. Zoom was kind of like a big disaster from pretty much after October 2020. So it has been a disaster in 2021. I have not talked about Zoom that much. I have not touched it that much. Um, it has just been going downhill all the way since the October of 2020, which is kind of disappointing, right? A huge chunk of the profit is already ate up. I'm still making money, although I'm not making that much money. And I haven't really touched it yet. If not, I've added some to my portfolio. And I think there could still be a chance this thing bounce back up, but we really have to see and how Zoom monopolized this market. I think they're quite big, but I don't think they are that big yet. As competitors, there are WebEx, there are Microsoft Teams, there are Slack, there are all these other platforms that can help people to facilitate online conferences throughout the world, and Zoom is not the only one. So that economic moat right there has its good positioning, but it has not yet claimed its dominance. So that's something that's definitely interesting to mention and worth our attention. The next big thing in tech sector is Netflix. I actually can't believe Netflix dropped on this earnings call. Yes, I know the earnings number look ugly, right? It obviously did not beat the estimates from Wall Street, but I still think Netflix is just overall healthy throughout pandemic, especially if you look at the extension of Omicron, right? That's going to extend work from home and working remote. We're going to expect higher number of video streaming from home, which I thought it's a correct thesis to go with. But just taking a second look at the company's economic moat, I think it's also an appealing argument to say that Netflix is probably hitting its peak, right? Why do I say that? Because it could be an argument to say that, hey, if an online video streaming company is doing video streaming from home, then the middle of the pandemic is kind of the best case scenario for this type of company, right? So whatever performance that it came up with, that's probably the peak of it, unless pandemic get worse. But even pandemic get worse, the chances are just more people stay home. Then those who have not stayed home, who insist on going out, they're probably gonna figure something out. They're probably not gonna stay home to watch videos because that was not the life choice that they chose in the first place. So if you think about this argument from that perspective, I think there is an argument. I think there might be a desire to get out of Netflix stocks and see what they can do. For now, based on this chart, I think overall it's still healthy. Of course, we're stopping at this level where formally it's a resistance. So let's put a horizontal line. We're just going to refer to that spot. Right now, it's slightly below that, which makes me think that there's a chance that this thing go down further. But we'll have to take a look and see how it goes. Looking at the relative strength index, especially when you look at weekly chart, it's already at an oversold area. So right off the bat, we're looking at 32 or 37, and this is going to be the range for the RSI that Netflix will bounce back from. So I think that is going to be interesting price point to take advantage of. If you're a long-term holder, if you want to balance your portfolio by involving Netflix stock, I think this is a spot to go. Another name that came down is Amazon. Now, I think Amazon overall, it's still healthy. Of course, it breached the support data all the way back to September 2020. Now, that is a support over a year ago. It's actually quite interesting, right? Because there are a couple of times Amazon is trying to break new heights. Like the first time is over there, let's put a horizontal, let's put a vertical line. Next time is there, let's put another vertical line. The third time is a charm, let's make another vertical line. But unfortunately, that's it, right? Starting from November 2021, the price just comes straight down from Amazon. Okay, so that's also something to watch out for, right? And if you look at the weekly chart, which is a relatively big time frame, we're at this spot, which is now below three moving averages, and it's going for the last moving average. So if you're holding Amazon from the past year, I think there's a good chance you already got squeezed out of your position. If you're holding more than a year ago, like I did, but overall you're probably doing okay. You're probably still making money, you're just not making that much money. So my recommendation is again hands off because it could go either way from here. And the last stock I'm going to talk about is Disney. It's kind of shame that this company has been going from all-time high in March 21st all the way to right now, which is actually very surprising. So let's put a vertical line, and that's the high of the market. So right off the bat, we're looking at 200. That's going to be the historical high that we're shooting for. But unfortunately, the stock just come back down. Now, this actually goes against my intuition, right? Because I thought Spider-Man is doing well. I thought the box office is hitting billions. But perhaps during my research, some numbers are not matching the Wall Street consensus, and somehow Mark is giving the stock a lower market value than I was expecting, which kind of makes me think, okay, maybe there's a buy spot in Disney. Now, if you look at this year 2022, we got lots of movies coming up, right, from Disney. Of course, I'll try to watch all of those movies myself because I want to support Disney's company and Disney's economic strategy. But overall, I would say these couple of drops are very surprising, especially the drop a few days ago. Let's put a vertical line. This drop in November, I think that's due to an earnings call, and I think the next thing to watch out for is this next earnings call in the beginning or in the middle of February. So with that being said, I think it's interesting to come take a look at QQQ. We're gonna wrap this video up with QQQs, which is the Invesco Trust. That is the power shares. That is an ETF fund holding all of the large cap tech stocks in the US equity market. And right here, we are breaching this point. Let's put a trend line, something like that. That will be what we're looking for. And the next support is going to be somewhere here, which is around 310. I don't think it will go to 310. I think that's too big of a call to make. I think the chance of bouncing back up here is much higher than just go straight down. But we're going to take a look at this name and we're going to see how things go. So with that being said, that's everything for today. Hope you like the video. If you do, give it a like and hit that subscribe button. And I'll see you in the next episode.